welcome to a special episode of the Auto Futurecast with me, Chris Kirby, in association, as always, with Tomorrow's Journey and Asset Finance Connect. Today, we are live at the Asset Finance Connect Summer Conference, covering all kinds of topics in the conference today. Super interesting event, everything from AI to policy and everything in between. During the sessions today, we're going to take time with some key people, some key attendees, to understand what they think about the conference, some of the key trends they're picking up, but also to get their input on things like EVs, impact of AI, and some just future trends that they see happening in the market. So hope you enjoy this episode. Now we're welcoming Karim Haji from Scania Financial Services. I think I get that right. Just to start off, before we get into the conversation, you give us a bit of your background, super interesting in the auto finance space. So give us a bit of an overview of your background and your role today.
Yeah, sure. So, I've been in the industry for probably over 20 years, more than I'd like to admit, to be honest, Chris. So at the moment, obviously, I'm Managing Director for Scania Financial Services, been in the role for 10 months. I actually joined Scania as a brand almost coming up to 4 years ago. And I first went to Scania Great Britain, so the OEM side of the business, if you like, as Transformation Director, really focusing on driving the adoption of EVs, HGV EVs in the industry, and just getting our organisation ready for what is due to come. It's been a little bit slower than we had anticipated, but it's still there and it's still our trajectory from a Scania perspective. And then prior to that, I pretty much worked in the auto finance space. I did a lot of work with White Clark Group for 7 years, doing lots of multiple implementations of asset finance, auto finance software. I've also worked at Mercedes, where I was CIO for a while and sort of head of IT. And prior to that, I've done a couple of stints at Volkswagen Financial Services. So that's really, over the last 20 years, it's all been asset auto finance, really.
Yeah. All of the Milton Keynes.
All of the Milton Keynes brands.
Big up the Milton Keynes. No, brilliant. I think it's such an interesting perspective. We've known each other for a while, and I've heard you speak at conferences and things before as well. So it's really, really interesting to get your views on things. We're going to start off with the EV space. You touched on it already, and to get your views from a HGV perspective, because quite often on the podcast we talk about EVs, everything from battery technology to vehicles, but we're often talking about cars. So what's your sort of current take on the state of HGV, EV market, UK, Europe, wider?
Yeah, like I said, the pace at which EV adoption is going in the HGV space is a lot slower, particularly in the UK. If I look at Europe, they've had more advances because there's been lots of government funding. Okay. If you look at Denmark, Norway, Sweden, to an extent even Germany, they've had lots of government funding, which has helped subsidise the capital costs of these large HGVs. EVs are quite expensive assets. Yeah. Unfortunately, we haven't had the same in the UK, which has slowed down the adoption with our customers. Now, back in probably like 2 years ago, 2.5 years ago, there was the ZHID programme, which is a zero emission programme, 200 million put aside by the UK government. And even with that funding, the adoption has still been slow because people, even though you've got operators that have access to subsidy, they're still very reluctant to come to the table because of the lack of infrastructure in the UK for HGVs. And if you've seen on LinkedIn, you would have seen maybe some truck that's taken over sort of 4 parking spaces, but for car charging and parked sort of the other way and literally blocked a whole row of EV chargers. Yeah. So we can't have that going forward. So making sure that we've got HGV infrastructure for charging is quite critical. There's one that's just been opened up by Milence, which is a joint venture with Volvo Group, Traton, and obviously Daimler. I think there are more of that coming, but that's what the UK needs to sort of drive that adoption.
Yeah. And that's specialist. It's a specialist equipment as well. Like in my very layman's terms, when I explain batteries and charging to people, is that's like filling a swimming pool. And if you've got a small battery on a small car and you've got a small hose pipe, and I won't do that whole story because I've done it before in the podcast. But the thing with a HGV is it's got that much bigger a battery. Yeah. So therefore you need a bigger hose pipe to plug into it to get. So
exactly.
Even if it was using the best car chargers, and even if it wasn't taking up 5 bays, that still probably doesn't give operationally, particularly on the go, maybe at a depot, it's different. So it's almost like needs its own like it is.
It needs its own infrastructure, yes. I mean, and with HGVs, obviously we've got megawatt charging coming as well as a technology for HGVs, and that could be any 350 kilowatt upwards. Yeah. So to try and get that level of energy, you're probably thinking of substations, everywhere that you need to charge. Yeah. So opportunity charging becomes a challenge. Yeah. And when in my old role in transformation, when we did the mapping of the UK and looked at where those sort of black spots are, there's quite big areas where actually we just don't have the grid capacity. Yeah. And when you talk to the providers, they say, well, actually the grid capacity is there. It's actually getting the electricity to where you need to get it to, and that requires a lot of cabling and a lot of infrastructure, and a lot of investment. I think that's where I think the effort needs to be to really drive HGV, EV.
Yeah, absolutely. Because as you said, that connector piece between the charger and the vehicle and that kind of thing seems to have moved on quite a bit with megawatt charging. But yeah, ultimately, I guess if you were charging even at 350, that's like the equivalent of 2 or 3 car chargers. And then you see the effort it takes to put in 10 car chargers into a service station, or if you need 10 HGV,
and then the space that you need as well.
Absolutely. Yeah. So I think it's good, definitely a fascinating space to watch. Is there certain areas of the HGV market that are more open to it? I don't mean necessarily that the company's more open to it, but that it suits multi-drop or rather than longer term. Is there?
Yeah. So I mean, definitely what we're seeing is when we're talking to customers now, it's more depot to depot charging. Yeah. So they're not looking at opportunity charging. They're going, okay, we've got a defined route. It's going from it's going from point A to point B. It might do a drop into point C, but it's coming back to point A. And you can actually do that route on a single charge, or know that you're stopping for 45 minutes somewhere and you can top up the charge at another depot. So those use cases where we've got customers and operators who've got depot to depot points, that's where we're seeing a little bit of traction coming through now, rather than the opportunity which is en route travelling. Yeah. So those are the sort of the early adopters, if you like, for HGV BEVs, and we're seeing a little bit of traction on that now. Yeah. So I think that is where the big operators, so the big fleets, the big corporates, they're the ones that have the investment to put into depot charging, and they're the ones who can actually afford the BEV vehicles as well. So I think that's where we will start, and that's where we are starting now. And then I think it will start to filter out. And then the other area, obviously, is that sort of last mile delivery. Yeah. So we're in a particular area. It's a ultra low emissions zone, for example. So therefore, you need to hop into a BEV to do that last mile delivery. Yeah. And again, that's where we're seeing a little bit of traction now with our customers.
Yeah, definitely. It was a conference or an event a couple of weeks ago. I think they were talking about actually talking about it with buses. They were saying that like buses, this is similar to your depot, saying actually buses, although they do a lot of mileage, it's predictable. Yeah. And that's an area, and also last mile, we've talked a bit about last mile delivery in our in previous podcasts. Just moving things on a little bit from the EV side of things, we're at the Asset Finance Connect conference today, a lot of talk about AI. How do you see that role playing out in your business, either today or kind of in the future? Are you using it? Are there plans to use it?
We definitely got plans to use it, but I think for us as a business, as a captive arm, and the space that we're in is very much based on human relationships. But I definitely feel there are some use cases, like in-life contract management, contract amendments, novations, things that we can automate. I think there's definitely use cases that we can, adopt and make sure that we're actually creating efficiency in the business. So definitely on my plan, certainly, is within the next 12 to 18 months to embrace that technology. But what we need to do is make sure that we've got the right processes in place to automate. And I think if you're too hasty in taking AI forward, but you don't have the right business processes in place, I think it can create more disruption than actually driving the efficiency. So for me, it's about making sure that we've got the right process in place, get that really embedded in, everybody understands what we're doing, and then use AI to then automate. Yeah. But definitely is on my radar, but I'm just keen not to jump too fast, too quick, because I think if you get it wrong, then I think it can hurt the business. Yeah, and a lot of our customers are long-standing customers. So, a Scania customer can be with us for 20, 30 years, and it's built on personal relationships. So I don't want to lose that either, because that is our USP. Yeah. And I don't want it just to become a I've put in an email or a phone call and it's done it automatically.
Yeah.
I think
I
there
get
is
a
real
2-second
value.
response, but it's automated or
Yeah.
AI generated.
Yeah, exactly. So I'm keen not to lose the human touch. And I think given that everything is going towards technology and AI adoption, actually, if we lose that personal connection, I think that would be quite detrimental to our brand.
Yeah, definitely. No, I think that totally makes sense. And I think we've been talking at the conference earlier about helping consumers with their buying decisions within the automotive space. That's clearly different for an experienced fleet manager. Doesn't need to query an AI model or an AI agent to tell him what trucks to buy. Nobody knows that process. So I think that kind of in-life thing is definitely better. But you're right, and I think obviously with your experience in transformation work in IT, you know that.
I mean, having worked in the technology space, I'll be the first to be a very early adopter of technology because that's my background. But on this particular, and now being in the FS business, I can see how much that human interaction is so much valued with our customers. So I'm really keen to hold on to that.
Yeah, and if you could take away some of the manual work, not necessarily the communication,
exactly.
But the manual work,
Yeah,
and that frees up.
So that back of house, back office type. That's where I think the AI and the automation will really help. Yeah, definitely.
Great stuff. And then just to finish up, something we always ask our guests on the podcast, just what you think is a trend or something prediction for the next sort of 12 months. What's on your radar? And AI and EVs are probably too often, but is there anything else?
They are, but I think there's a lot of transformation in general and a lot of change going on in the industry. I mean, we've got the whole, commissions disclosure, which does impact us to some extent. Because we do use broker panels and introducers, for some of our funding. So it does impact us. So I need to sort of let's see what happens in that space and how the business model may adapt or not to take into account what comes out of that. So I think that's a space that we've got to watch. I also think in the current economic climate, there is a strong focus on cost efficiency. Yeah. So I think, again, that's something that certainly for me, as MD and responsible for the P&L and the results is quite high on my agenda. Yeah. And again, making sure that we've got efficient processes and that technology is working for us is a big key thing for me. So we have a platform that was implemented about 3 years ago. I still think we've got an opportunity to leverage that platform and really streamline a few things. So we've got a big program going on at the moment looking at of our business processes, which ones are best practice, industry best practice, and which ones aren't. So for the next 12 months, that's my focus. And then once we've got that baselined, it's then, okay, where do we automate?
Yeah, so kind of platform for growth through what is a slightly turbulent time, but it's also for everybody.
And obviously I need to look at alternative, funding sources as well. We take a lot of our funding from our treasury in Sweden. I need to look at, okay, where are the other competitive, lending opportunities that we've got that we can actually grow our portfolio as well in our book. Yeah,
brilliant. Karima, thanks very much. Always
You're very welcome.
Pleasure to talk to you. Really appreciate it. Enjoy the rest of the conference. We've still got half the day to go. So have a good one. Maybe we'll see you on the podcast, on the full podcast. Then as well.
Yeah, let's hope so. Thanks, Chris. Thank you.
So now I'm joined by Richard Huston from Vamos. Richard, great to have you on. We've just come off stage pretty much at the AFC conference, been talking about some AI related activities, which we're going to touch a little bit on in this little recording. But just to start off with, for our audience, tell us a little bit about you, your background, how you've come here, but also about your business and what you're doing.
Yeah, sure. Thank you, Chris. So I'm the managing director of Vamos. So Vamos is a company specializing in applied AI for financial services and with a particular focus on asset finance operations and how we can apply AI in that area of the sector. My background before I founded Vamos about a year ago is I was working as a solution architect at Alpha, and I'd worked in the industry for about 12 years, implementing software within the asset finance industry across the US and Europe. And I made the decision to launch Vamos last year because I really saw that this was going to, these advances that we were seeing in the latest AI technologies were really going to present an opportunity for businesses to do a lot more in terms of how they bring AI into their operations, how they use it to augment customer service and things like that. So we've really made that kind of the focus of what we're doing with Vamos and with the customers we're working with in the industry.
Yeah, interesting. And I think you've got that a nice kind of two sides to it. So you're working with AFC here, but also with a number of customers on that sort of advisory level, but also have that kind of product that's solving the specific use case that you know so well. Tell me a little bit about the product, actually, just for our listeners. I know we've discussed it before. I think it's super interesting in its applications.
Yeah. So we actually launched it at the last AFC conference back in November as part of the FinTech Innovators competition. So when we launched it, we presented its first set of capabilities, which were around certain customer service use cases. So the product is called Lucero, and it integrates with your email server, so your Outlook, and with a company's back office systems. And the purpose of it is it's designed to take incoming emails from customers and brokers, understand that request, connect to the data in your back office system, and then work out what that customer or broker is trying to achieve and speed up the entire kind of workflow of that business process. But it's still very much a human-driven process, right? So it has a user interface where the operations team or customer service team, they're working in that app, and they're being presented with all the information, and they're being given suggestions from the AI on what actions they might want to take next. And so we think that's a really useful way of approaching this, rather than thinking, okay, we take AI and we just replace all the humans and it can just be all fully automated. We have this focus on how do we bring it into existing business processes and workflows and just use it to remove some of that tedious admin that exists in those processes. And it's really remarkable, how you can take away some of that long-winded admin work of keying in data from documents or writing emails, fully by hand. Instead, we're just providing this as a way for it to speed along that process, but still in the human control. Yeah,
so augmentation or co-pilot we talked about earlier in our session, which I think is really, really interesting. And for me personally, I think is where the best value is going to come from AI generally in the world. I was having a conversation with my friend at the weekend, and he was saying, I've been listening to podcasts. We're all going to get paid just a salary by the government because AI is going to take all our jobs. And I was like, maybe, but probably we won't see that because it'll be an augmentation. In theory, AI could do all of these things, but just no one knows enough about it. It's not sufficiently trusted almost in an organization to be able to do that stuff. It's got the capabilities and the power to do it.
It's an interesting one because I've been thinking about this a lot, right? Because there's a lot now, if you look at the market for AI solutions, and a lot of talk about agentic AI and AI agents and them going off and doing everything for you. But, we within our company, we use AI constantly to help us with everything. And yet I don't think there's any situation where I leave the AI to go and do things autonomously. It's always very closely under my supervision and control. I've been experimenting with AI agents for software development, right? So when we're building features in Lucero, we've got new stuff from OpenAI and from Google that you can give it instructions and the AI will go off for 5 or 10 minutes and try and write all the code for you and then come back to you and present it. And I was experimenting with it, but what I found was it was actually more hassle than it was worth because I still needed to go through that and understand that. I can't put that code into our app if I haven't checked every single line of that code. And it was taking me more effort to understand all the different things that had gone off and done, sometimes going quite off-piste. So it's not to say that these things won't get better, but I think, at least in my experience, we're using AI constantly. We're able to do so much more with it, but it's always under very careful kind of control and supervision and checking what it's doing and guiding it every step of the way. And that's the same approach we've taken in terms of what we're providing to our customers. We think that, especially within financial services, I'm a little skeptical at this point. As much as I'm a big fan of AI, I've enough to start my own company about it. I'm a big fan of AI, but I'm very skeptical about the idea that it can suddenly take over and replace people. And especially in the kinds of roles we're talking about within these financial services organizations and lenders, it's very sensitive work, requires judgment. These AI, these large language models, they're very good at reviewing large amounts of text and doing certain tasks, but they are not good when it comes to judgment and decision making. They shouldn't really be used for that. So I think it's going to be interesting because there is a bit of a tension between people who are kind of trying to race towards those autonomous agents. And I think they're very good demos. They give very good demos. Yeah. But I think you have to balance that with, the reliability and the customer experience or the user experience and what that means and how far you go with that autonomy. Yeah. Maybe in 20 or 30 years, maybe we're all on universal basic income because, AI has replaced everything. I don't know. I don't think anyone knows. Yeah. But at least if we're talking in the next 5 or 10 years, that's not the model I see happening in most cases. I see it being something that steps in as an augmentation, like you said.
Yeah, and it will develop over time. I guess it's the same thing if you went and said, I always think that my granddad passed away the year before I was born. So I was imagining like he only saw the world up till when I started to see the world, right? And I always think, what if you showed him things today? And there's certain things that haven't changed, certain things that have. If you said to him, by the way, you're this thing called email and your computer as powerful as one that was on, Apollo 11 is in my pocket, you'd be like, oh, well, we won't ever need to work again. But in the adoption of electronic communication, for example, we've found, yes, it's streamlined processes, but we found other ways to do.
I was thinking about this today because, we've been looking at kind of some of our marketing stuff, and it's we've been using some retro computer imagery in some of our marketing, just mainly to avoid having anything that's like robot hands or brains or stuff, because that's a little too overdone in AI stuff. But I was thinking about the fact that the promise of computers was that it was going to free us from all of this toil and admin, but we've just we've ended up with lots of new layers of admin that we have in our lives. So there'll always be, I think probably it's safe to say there will always be more work
because the speed of adoption was quicker, but I think because it will be slower in that time, it will evolve rather than
people. One of the things that I say to businesses is, think about it from this perspective. If I told you tomorrow that I could make you have twice as many staff at no extra cost. Think of it that way, right?
Yeah.
What would you do with that power? Because I think a lot of companies have a lot more that they would like to do. If it was more, if the cost benefit of different things stacked up differently, they wouldn't. I mean, some companies might just go, okay, great, I'll get rid of some headcount. And we've seen some examples of that. Sure. We saw examples of that with Klarna, who are now actually rowing that back, right? In just the last couple of weeks, after laying off a lot of customer service people, the CEO had a revelation of, actually, humans like talking to other humans when they have problems. So we've seen that getting rowed back a little bit. But I think most businesses, if you give them this capability and they suddenly can do a lot more, they will do more, right? Like we all in our businesses always have more that we want to do if we had the capacity to do it. So I think it just drives more work. That's been the trend with all technology.
More innovation and more work. And I do think that whilst we're somewhat not talking it down, but we're sort of putting a bit of ice on it.
I think just grounding it.
Grounding it. I think
for me, that's the important thing. And we talked about it in earlier today when we were on stage here. We talked about how you ground this in the reality of what it's good at, what it's capable of. I think that's really important because it's too easy. I sometimes think we chose a bad name for it with artificial intelligence because it gives people the idea that it is some sort of sentient. It's really not, and it's created this kind of thing around it that it's very easy to hype up and overhype. And actually, it's important, I think, that we kind of keep it grounded in where it applies,
and equally understanding that it is a technolocal shift. So this is also the thing is also in this conversation with my mate. I was like, look, we're not all going to be on some kind of universal basic income for next year, but also we should understand he works in the design field, right? So he's a creative lead for a big brand in the UK, but has come through, trained as a designer, all this stuff. And I was saying, like, now's the time if you want to supercharge your career. I wasn't saying this specifically for him. I was like, if you're a junior designer today, I wouldn't be thinking about how best can you learn to design. It would be how best can you leverage these tools to do your job. So it will be a force multiplier multiplier, a game changer,
100%.
but it won't be a game ender.
And we have this, within my team. So our head of design is using all of these latest tools, and you can. So we do fun things where we might take some stock imagery in the old-fashioned way. We've not generated. We've taken stock imagery, but then you can use AI to make it move. We can turn it into a motion thing and put it into videos, and it can be like, this might have been a stock photo that we had on our website, and it can be something that's in motion in a video. Or even just a few days ago, Google released their latest video generation model, VO3. And it's incredible. Like you're going to start seeing a lot more things being generated with that. But if you were in a creative industry, you've got two choices, right? You can, sort of rage against, the changes, or you can make sure you're keeping up with those technology changes. And it is just new tools. That's what these things are.
Yeah, definitely. And I think in our world as well, just going back to kind of where we started really, and the product that you have, and also some of the stuff that we're working on within Tomorrow's Journey as well, is about that augmentation. And actually for us, we're doing it on the customer facing side. So how can you bring that information together? And I think for you guys then on the back office side. And I think I drew a diagram internally. Drew a diagram the other day that I was showing the team, but I think I need to flesh it out a bit more. But it's talking about kind of interactions and tasks, and saying like there's an ability to be able to streamline some interactions with the customer, move the interactions upstream, help the customer move to buying decisions, or move through a journey faster, or complete tasks faster in the back office. And actually in the two products that we both have, we could do one or the other.
It's really important to break it down like that, rather than, and I think this is the trend we're seeing. I've definitely noticed that over the last 6 months, as companies are getting more serious about starting to adopt AI and incorporate it into their business operations and maybe certain customer facing spaces, breaking it down into exactly those tasks and interactions and figuring out where can I get the most value first? How do I, start to introduce this? Not thinking I'm going to suddenly AIify my entire business and we're going to do it everywhere, but breaking it down and understanding where it's going to add value in specific interactions, specific tasks.
Yeah, definitely. And setting out that bit, and I also said this earlier on in our session, the North Star for us with the Journey Agent is that you could, in theory, automate all of it with AI. As a customer, you could talk to the AI on the front end, on board with the agent all the way through the process, do your documentation, asking questions as you go along, move through the process, do any contract changes and things that you want to do in life, and then also do your renewal through an agent. That's where we want to get to, but we can break it down a little bit. There's no point in me going and building that today because it wouldn't work efficiently and nobody would use it. But if you've got your kind of like North Star, and then you break down which are the easiest things and most valuable things to work on.
It's interesting to think how expectations may start to shift, right? So especially generationally, we talked earlier, I mentioned it, that I was speaking to a broker who said that they're now starting to get referrals from ChatGPT. And that is where young people are going to be going. No longer will it be, a Google search or whatever else, and certainly not a phone call or anything like that. They will be going to ChatGPT, and it will be pointing them in the direction of things. And they may get used to a certain type of interaction of being able to do things themselves. I think, though, we always have to be thinking, you have a diverse customer base, and someone coming for a new car is, depending on who they are, they may have different preferences around how they do that. We've been talking about the role of dealerships and balancing the tech approach versus the human approach. I think people will always have their own preferences for how they go about that buying journey. And being able to serve all of those is brilliant because, a lot of people will be quite keen to, actually, if I can just sit there on my couch with my phone and have it guide me through all of this and have it very casual. And, who knows, we may end up having it with the kind of conversational AI at some point. And it will be.
So the move to voice, but which is essentially doing the same thing, but understanding spoken voice rather than text voice. That conversational process is really interesting. But you're right. And I think that's part of the problem why a lot of online sales in auto has been really difficult, is because, and I also referred to this earlier, that people don't buy cars in the same way. They don't have, it's not a linear process. I mean, it is when, consideration, go move through your different stages or whatever, but everybody moves through that process in different ways, wanting bits of information differently. And I think when you've got the ability to conversationalize that and kind of pull into it. And I think if you comes back to the the real basics of it, and certainly where we've started. The analogy that I was using with some of the guys internally, a non-auto one, but recently came back from holiday. I was like, I really liked that place I've been to lots of times before, but do you know what? It was a bit busy. It's getting a bit popular, getting a bit busy. So I went, ChatGPT, I like going on holiday to this place. Can you recommend places that are like it? And it went, okay, here's some 5 places that are like it, but it was all in Spain. I was like, okay, well, how about further afield? But also they need to... Where flies from Luton Airport?
Yeah.
Oh, here you go. So it's a short list. Oh, and I also want it to be less than an hour's drive from the airport at the other end, and it's good for cycling.
That's an incredible example.
And that's but that would, I could have found all of that. It's only finding that information from the internet, but that would have taken me 5 hours, and I did it in a 5-minute conversation.
I now use it in that way when I'm looking for somewhere to meet for lunch in here in London, for example. If I want a particular type of place that's going to be quiet or nice or whatever, I'll just ask ChatGPT and it will go and do the searching for me and come back with recommendations based on having sort of read the people's reviews or different things like that. And it's nothing I couldn't do myself, but it's
putting multiple sources of information in one place that you can, and what about.
And it is a great shortcut when there's lots of information you want to pull in at once. And this is going back to the journey agent and comparing different options, different vehicles and things like that. That is naturally information rich.
Yeah.
And if it can be an easier way to talk through or to be given that comparison, go, oh no, actually, I'm more looking for something like this, and the way you have that more natural interaction.
Yeah. And you might not know your questions to start with as well. So I didn't know. I didn't ask that full thing about the holiday in one go. I just started off and then I went, okay, that's cool, but I didn't just want Spain. How about this part of the world? Okay, and then how about this? And it even got to the point where I was like, and what's the average flight price for the 5 you've recommended? And I was like, oh, those 2 are too expensive. What's the average hotel price for a 3 and 4 star hotel in these places? He says, oh, in July it's these. Yeah. And I've chosen to go on holiday to Croatia in July.
Let me ask you a question. Having done that, would you have trusted the AI to go away and book all of those things for you?
No.
And that's really interesting because when people are talking about AI agents, one of the things that comes up the most is travel booking. And they're like, it can go off and book your travel. It's like, but I want to really carefully review these things. So this is back to that paradigm of it's a great tool. It helps you to find that information and go through those decision processes. But then it really needs to present that back to you. And we talked about this again within the context of the journey agent and what you can see there. And you want that information presented back clearly to then make that final decision. Rather than being like, it's very unlikely anyone's going to be doing that with a car decision of like, I'm going to let the AI decide for me. But even with a holiday, and so that's again where this balance of how it comes into play and where you're, it's great for sending it off to do the research on things and then having it come back to you. Yeah,
it's been interesting because we've started the next stage of our development of the agent is to look at the onboarding process. So we digitized onboarding through a standard, stepped process today. And what we've started to do now is that we do let the agent go off and do it, but it's getting the user, it's talking the customer through each step. So it says you need to do an ID check. Would you like us to open a window to do the ID check or send you an SMS? And it sends you an SMS, you do the license scanning, selfie, usual thing. And it goes, oh, thanks very much. Now you need to enter payment details. It can answer questions around that. So in our process, we see high levels of drop off on the static process because people are obviously going, why do I want my ID? If you ask it why you want the ID, it will say, we're doing it for these reasons. But it's still the customer's entering the information. So it's the same thing if you were booking a holiday. You'd go, right, we've booked a flight. We found these 3 flight options. Here's the prices. Which one do you want? I want this. Goes away, selects it. Which seat do you want? You can have 4B or 17A.
And I think that's such an interesting thing from a user experience perspective, and something that I think people are only starting to figure out now is how do you marry up that AI interaction with them presenting that stuff back effectively. And that's what you've been working on with the journey agent is how you do that. And I think that sounds really interesting, the way you've got that, putting that stuff back in front of the customer, taking them through those steps, but it's still more flexible than a typical kind of journey in that way.
And you can ask questions around it, and you can stop. I don't think how we've got it right now is slick enough because it takes you out. We want it to be in the contextual flow. So at the minute it's kind of like jumping between, but at least it's sort of guiding you through it rather than just going, right, well, give us your bank details and upload your ID, and then we'll go off and do all this for you, and the car will turn up next week. So it's still guiding you through the process.
So I use this AI powered email thing called Shortwave, which lets me use my Gmail, but it's got a built-in AI, which kind of Gmail now also has as well, but these guys did it first. And if I'm reading my email, I can now say to it, someone might have mentioned, let's meet on this date at this time. And I'll just say to it, create a calendar appointment. But it won't go off and do that independently. It will show me within the chat in this nice user interface what it's proposing to create.
Yeah, okay.
But it's this marrying of that chat interface with more traditional user interface. Yeah. And being able to present that back to you in a seamless kind of experience. And then I can review it, and either it's fine and I just click yes, create, or actually I can just type back to it and go, oh no, you got this detail wrong, change the date to this, and then I can approve that.
But it's saving you the task of having to go in, click create.
And click it. It's amazing. It's like I use this every day. Like people will just propose to, something in an email saying, yeah, let's meet here at 3 p.m. blah. And I can just say to the AI inside my email, please create a calendar appointment.
Or it says, I can do next Tuesday, a week on Friday, or a week. You can say, which ones of these can I do? Book the soonest one, send a meeting invite.
And it's reading, the context of that email. Mm-hmm. So it's knowing, it's got this kind of understanding of the context of the conversation. It's so handy. It's so handy.
I think that's it. It's understanding, being able to understand the context of the conversation.
Yeah.
And then combining that with multiple data sources to give you an answer. It's kind of just skipping I've got to read it. Now
and then I've got to go over here.
Yeah. And then I do a thing. It's not actually doing anything you wouldn't do anyway. It's just giving you an extra step. Rich, I want to talk AI all day with you, but unfortunately these are supposed to be short sessions. We'll definitely do something on another day. Just finishing up, what do you think is your sort of big thing for people to look out for, something to watch, an area of interest? And I know we've talked, and AI is going to be like a big one of those, but is there something specifically in that, or something in the wider sphere that you've got an eye on as the sort of next thing?
I think the big overriding thing that people will be getting to grips with over the next 12 months is integration, AI integration. So people are realizing, okay, these things are great, but if it's just a chatbot on its own, it's limited in what it can do. And we talked about it earlier today when we were talking about how you've connected it to the Journey platform and the data that you have there and the vehicle data. And we've heard other examples today as well. And that's really, I think, the major topic of the next 12 months is starting to integrate this AI so that it's seamlessly connected to the systems, the data, and can actually help you do things practically.
Yeah, definitely. I think that's such a big part of it, because actually in our travel example that we were just using, if I asked ChatGPT to book my holiday for me, it couldn't. It doesn't have that thing. If it was something from TripAdvisor or Expedia, or if it had those links into it and had the data, maybe that.
And a lot of these companies are working on that now. There's a lot of stuff now with the new model context protocol that's come out that makes it easier to hook these things up to chatbots. So a lot of companies like Stripe and others have come out with their own way of interacting from a chatbot to their APIs for integrating with them. So that is going to be the probably the most impactful thing we see with AI over the next 12 months is things starting to get hooked up more effectively, so that you can then do that. You can just say to ChatGPT, oh yeah, okay, I want to do this one, let's go ahead and do that. And but again, you still want it to come back to you for the confirmation and the review and all of that stuff. So that's the user experience piece they need to work on.
True agentic from a customer perspective. I know we can do it in the back office where we could connect 4 or 5 tasks together from an inbound email, but that external, definitely an interesting area, and to be interested to see how quickly it takes customers, or whether users will trust it, and how quickly that trust comes. I've got a feeling it could be something could get adopted really quickly, or just could fall a bit flat.
And that's it's going to be interesting to see how that plays out in the consumer space. Usually with these things, that's where it's going to move faster, and we're going to see it move a bit more slowly in the business space. But our mission, what we're working on at Vamos, is that integration piece, is integrating Lucero with existing systems so that it can be useful in a business context. And we've actually seen, in the last few months, really a lot of interest from lenders in asset finance to do this.
So we're joined now by Tony Lynch from CarPass.ai. Tony, welcome. I hope you're enjoying the conference today.
Yeah, very much so. Good afternoon.
Really excited to have you on and hear what you've been up to. To start off with, do you mind just giving us a bit of an intro into your background and also a bit into your business? You have a super interesting background in the auto and tech space. So tell us a bit about what you've been doing.
Tony Lynch, I am a serial product builder, business builder. I think the interesting thing for this conversation, I think in 2014, we built a corporate carpooling platform called Faxi.
Yep.
And we patented some technology we worked out that we could use Bluetooth on mobile phones to prove proximity.
Okay.
So you could prove people were traveling together.
Yeah.
And if you could prove people were traveling together, you could reward them for that journey.
Okay.
So it was super sustainable. And I think we sold that business to Toyota Finance and Toyota Insurance Management in 2019.
Okay. Yeah. Brilliant.
And from there, I was the entrepreneur in residence reporting to the Toyota Finance board. And that's when I became super excited over the last 2 years. Toyota sort of funded the setup of a company called CarPass.ai, which is what I'm doing now, which is the founder, where we're looking to use AI sales agents in the car and affiliated products sales process.
Yeah, fantastic. Yeah, really interesting. I've seen some of the product work. And your product is focused on kind of used car buying primarily, or is it slightly wider reach? Just a little bit about how it works.
It wasn't until today. And then we've just done a workshop with some other asset finance professionals or finance brokers, and it's very clear that there's an AI requirement in all sectors. Obviously, that's not going to come as any surprise. We probably, for this conference, probably focus too much on auto when there's probably a bigger need. What we're seeing now is, for this particular conference, the finance providers want a better way of integrating with their hardware sellers, so their finance products are front and center in the sales process. And that's what the AI sales agent will do.
Yeah, great.
So yes, it's been a very interesting day. You notice a level of excitement from a lot of tech providers when they can start to see what AI and automation technology can deliver.
Yeah, I think really in the last 12 months, it's gone from being sort of a buzzword with some cool things around that, the cool kids are playing with, to something that large businesses now are really understanding how they can harness it. I'm not sure lots of people are doing big things with it yet, but I think they've realised there's that opportunity, right? I think it's
I think the opportunity is that the big businesses aren't doing anything. I think there's a lot of fear factors. There's a lot of talk about complicated AI products that are going to take a long time to implement. I think the market's missing the opportunity to start with a very basic AI product, and that's very much our focus. Is to say to people, here's a product that works. Go live with it. Engage with your customers.
Yeah, absolutely. Yeah, and that's all absolutely the way to get these things, and particularly in a complex market like auto. And I know you're saying the opportunity here at this conference is wider, but when I think about the auto space and my time in there, it's incredibly complex, which is why it's so hard to transform. But with AI, it's easier to start picking off bits and making them better quicker than before. So definitely think that there's a huge opportunity with that. Just moving off the AI topic briefly, and I'm thinking more calling your wider automotive background, but we've just been asking people in these sessions about their thoughts on EV, on the kind of state of the EV market. Kind of where do you see that today from your own background and the areas that you're operating in?
From a Toyota point of view, I think they felt that they were behind the ball, behind the Tesla kind of wave, so to speak. I think they're now glad of that, as hybrid technology seems to be back in vogue, or certainly seems to be. So I think, I worry about the EV products. I can't quite see how anyone's going to buy a second-hand battery when your mobile phone, which is using the same battery technology, expires after a couple of years.
Yeah,
so,
of course, yeah.
And I think you're seeing that very much in residual values, and I think there's a lot of finance companies that have taken a bit of a bath on electric vehicle residual values. I know there was certainly some issues.
Yeah, absolutely.
So I think that's a problem that hasn't been resolved.
Yeah, absolutely.
So I think that's a very exciting market challenge. How you're going to get over that, and I wonder if we ever are. That's what I see. I don't think I'd buy a used electric car. Yeah. But you're now hitting a stage where there's a lot of used electric cars on the market.
Yeah. So, and we know that there's a huge market of used car buyers. Not everybody buys new cars. Not everyone can buy used cars. So
it's 2 or 3 times the size of the new market.
Absolutely, so there's a market to serve, and there's products now being available, and it's about matching those up somehow.
Yeah.
So yeah, definitely some interesting work to do in that space for sure. And then one of our next question really today, and it's slightly different for you as you're an AI business, I guess, but we're talking to people about how they're using AI in their business now and in the future. Kind of goes without saying that you guys are using AI because it is your business, but probably touching on just where we started with this. How do you see auto finance and asset finance companies starting to use AI? Where's the starting point if you were running a business like that today?
So I think that's very much the subject that we've been discussing with people today. Where we come from at CarPass.ai, we're only using 0.1% of the capability of AI. Mm-hmm. So we're super focused on the implementation of large language modules. And we're only really at the moment interested in two key features of AI or of large language modules, and that's the ability to have a conversation and the ability to ask questions automatically.
Yeah.
And I think those two key features of AI, specifically large language modules, are a game changer for the online sales journey. So what we did today, we showed an AI journey with a customer interacting with a sales agent that can have a conversation, and then you try to have the same discussion with a conventional website where it's a one-way kind of transfer of information, and you can see that any e-commerce website, asset finance or not, is going to benefit from having the conversational ability that a large language module gives you.
Yeah.
So. And that's available now off the bat. People should be implementing that now and seeing the response from their customers of engaging with an AI agent relative to their products.
Yeah, absolutely. Yeah, I think we've seen it quite a lot. I wrote some stuff a few months ago about chatbots. There's kind of the starting point of this, and how a lot of them were just, particularly in auto, had been terrible. So heavily geared over time. Yeah, exactly. Like there was one that I was looking at, which was with a previous customer of ours who had moved into a slightly different space, and they just had every question you asked, it was using an LLM to understand your question and answer it, but every answer said, "Would you like to make an appointment for someone to call you?" Literally everyone. So we could understand, it wasn't like one-word responses like old chatbots. It was saying, "Hey, great, thanks, Chris. Thanks for asking me that really complicated question. When would you like someone to call you?"
Yeah,
it's just like, what?
Yeah, no, and this is the whole thing. People are so scared of what we've seen today. Is that people are still so scared of AI that they refuse to allow its full potential. I think any of us who use ChatGPT or any of the large language modules day to day to write an email or to brainstorm an idea or to create a business plan, the day never goes by now where I don't engage with a large language module and I'm staggered by the quality of the response, or I'm staggered by the unique idea. There's nothing that I do on a day-to-day basis that I don't sense check it with an AI. And what you're seeing from the industry is they've de-skilled the AI to a point where it's useless. And they've taken away its ability to brainstorm with the customer around the product. And that's what we're trying to change. We're building AI agents with the full functionality of the AI, but to try and corral them into the knowledge base of the car dealer or the asset provider, so that that you do have a full conversation. And I think that's going to be the massive change that you see over the next 12 months, where all the people and I don't think we should say chatbots anymore. I think there's this geeky term of synthetic human or avatar. But from the work that we've been doing over the last 3 months, if you're not thinking about having a synthetic salesman as a human, as a real synthetic salesman, a synthetic human or an avatar, you're missing an opportunity.
Yeah, absolutely. Yeah, no, I agree. I mean, I've kind of classed chatbots under the legacy. Chatbots were the old thing. And actually, when we were developing our agent, one of the first versions we had of it was kind of like the best chatbot that you could possibly have, but it was limited. Whereas when you're using an AI agent with an LLM, today, like you say, you're starting by using 5%, 10% of the capabilities, but at least you can scale over time as it learns more, as it gets more information, as everyone gets more comfortable with using it. It's got huge potential. But that kind of like human-based conversational search and conversational process is super interesting. And kind of the final question that we're covering with everyone, you briefly touched on it, other things, what you think is the sort of trend over the next 12 months. I think you almost said this is the thing you're going to see over the next 12 months. So maybe it's already answered, but what are you seeing probably in auto and asset finance? What's going to be the biggest change that we'll see from 12 months ago?
I mean, the problem is with some levels of AI, it's still super complicated technology, and the cost of implementation is going to be huge. Some of the talent cost, if you're employing AI specialists in the UK, is very high. So, I'm not sure about the high end utilization of AI, how quickly that's going to be adopted. What I do believe is that you will start over the next 12 months to see a fundamental, not reversal, but transition in customer-facing websites. I think that at the moment, the chat functionality that we were talking about, I think that all websites will be transitioning over the next 3 years where the AI command line or the voice is the center of the website. At the moment, it's bottom right-hand corner. You press it if you want
it's an annoying thing that pops up and you go, get out of the way. But I've got to close my cookies preferences, and then I've got to think, and then the agent's going to pop up and ask me if I want some help.
And I think certainly I won't ever build a website. I won't build any customer interface again that isn't AI first.
Yeah.
And I think that's certainly as a customer interface, I think the website's dead. The conventional website's dead. Anything that is a mono conversation, or where the customer is looking for some. We've just done a demonstration there where you look at using an AI agent to ask to discuss what you're looking for, and then you go to a website and it seems 1,000 years old. It's incredible that any of us are still operating that way. But 99% of us are.
Absolutely. And I think that's definitely. I think it's definitely going to change. There'll be an element of the world. My mum, as a buyer, my mum says to me, "Can you ask the robot what I should do? How often I should ice my knee after knee surgery?" It's like, "Mum, you can type that. You could just say that into the thing." So there'll be people that won't get it, but I feel like there's a generation of people that either are becoming car buyers now, or will become in the next cycle, that will be used to doing things in that way when they're looking.
I challenge that on the basis that if I think about my own mum, and if it was put in front of her that she can speak into her phone or into her PC, and it will speak back to her, I wonder how quickly she'll prefer that interface.
Yeah, that's true. Yeah, because it is a thing about fear. Because actually, that's why I joke about that. I've used that example a few times with my mum when she said, "Oh, can you ask the robot?" It's because she's scared she doesn't understand it. But if then she did use it one time, I could exactly the same thing. You could see a bit pick it up. But I think there'll be an element of people that won't want to engage with it. But the newer, younger generation and people are going to change their preferences, because it won't just come from auto. It will just come from everything. Life. It'll be in works. People will implement tools to go, "Hey, this will help you respond to your emails quicker, or create appointments in your diary quicker." And when you get used to that approach and that conversation, it's going to be natural that it will come into buying a car, booking a holiday, finding a house, all of those things. So,
certainly it seems, certainly today it seems silly to go to a website and look for what you need to do, where you could just have a command line and just tell me what you want.
The same thing, even I feel silly now going to Google and typing in show me hotels in this location. I'm like, why am I doing it in here? Right, ChatGPT. I want a hotel, and I want it to be this price, and I want it to, and I want it to be this close to the centre.
If you think about it, though, even Google's been around for 20, 30 years. You still look at most websites. Even only Google really is the company that still only has a command line.
Yeah.
Everyone else is still showing loads of different content.
Just gives you the information, you land on it and it bombards you with information,
Yeah,
and then you have to find the stuff that you want. Yeah.
And that's not going to happen.
Yeah,
people aren't going to accept that. You're going to go somewhere and you're going to want an answer straight away because it's available.
Yeah, absolutely. And on that point, what a great point to wrap up on. Tony, thanks so much for your time. So interesting to see what's going to happen in this space. We're obviously close to it as well. So maybe we'll check back in 12 months' time and let's see how that is. That's brilliant. Thanks for your time. Appreciate it. Thanks. So we're joined by Dom Surlis from Ayvens. Dom, welcome. Thanks for coming on. I hope you're enjoying the conference today. It's been really exciting. A lot going on so far. We're getting towards the final stretch. Dom, just Ayvens, I think, will be familiar to most of our listeners. But tell us a little bit, first of all, about your background and your role at Ayvens, but also just then a bit about Ayvens and kind of the part of Ayvens you're in as a big organisation.
Sure. Thanks, Chris. My name is Dom Surlis from Ayvens Consultancy Services team. I've been working in consultancy services since 2010 in various roles. It's quite a small team in the business, and we have two main roles. So we both advise our customers on policy, and that would be advice based around financial analysis. So we do our best to be very objective in what we recommend our customers do. Taking account of not just sort of operational costs, but also tax and sort of market factors as well. And then beyond that, we also have a role to kind of keep abreast of developments in the market, legal and tax changes, and to make sure that we're positioning our sales and account management teams to be able to give best practice advice to their customers outside of specific consultancy projects.
Yeah, okay, yeah. So it's kind of on a dual-sided role, customer-facing, but also taking that knowledge back into the kind of core business.
Exactly right, yeah. So kind of supporting the sales team, but not actively selling. Trying to take a step back and be kind of objective.
Yeah, perfect. Okay, great. And then within Ayvens, again, I think within our listener group, it's a group of industry professionals, so everyone should understand. But to tell us a little bit about Ayvens' recent history and also kind of the role or the part of the team that you're in.
Yeah, sure. So hopefully people will have heard the name, but it's still fairly new. Ayvens is the company formed by the coming together of LeasePlan and ALD Automotive. So ALD bought LeasePlan. And Ayvens is the result. We're the biggest leasing company in the world and certainly one of the biggest in the UK. So hopefully that gives us a depth of expertise that we can pass on to our customers. Yeah,
great. No, definitely, and a great organisation with some really good people we know and we've worked with over the years as well. So great to have you on representing them. I'm going to start off just talking about EVs. Imagine an area that has been kind of going across your desk quite a lot in the last few months and a couple of years. What's your current take on the kind of EV market in the UK and wider Europe, if that's in the remit?
Yeah, I think it's an interesting question because in the UK, the government's very much pushed businesses to be at the forefront of of electrification of motoring, using the leverage they have through the company car tax system in the main. Yeah. And I think that's been really successful because it is a big lever. And if you give business people an incentive, they'll understand that and they'll follow it.
Yeah.
And when you combine that with the availability of salary sacrifice, which lets people opt in to having an electric company car, even if they wouldn't necessarily need one for their business use, it means that a lot of the companies we work with are now already at sort of 80, 90, even 100% electric in their fleet operations. And that's way ahead of the retail market.
Yeah.
So the government strategy has worked, and I think it's been a big success. But over the years, they've kind of let the retail incentives tail off. So where we used to have some subsidy for new vehicles, that's gone for cars and kind of perhaps on the way out for vans sooner or later. And it means that there's quite a big disparity in demand. We've kind of got a bifurcated market where the fleet industry is absolutely all guns blazing on electric, like battery electric vehicles. whereas the retail market is much more reluctant. And that probably won't change, at least until costs come down or until electricity costs come back down. And there's something there to encourage retail buyers to make the shift. And of course, the retail market is mostly a second-hand buying market rather than a new market. And that's causing problems of its own, because all those business cars that have been bought new sort of 2, 3, 4 years ago are now coming into a second-hand market and finding that the demand isn't there. It's something that through the BVRLA, we've been lobbying the government to address, because we think the whole value chain really does need to be sustainable if we're going to have a successful transition to electric motoring and meet the government's net zero strategy. But to date, it's something that they haven't really addressed, I don't think.
Yeah.
And that contrasts a bit with the European market, where most incentives have been kind of universal, whether that's through subsidies or through a sort of bonus malus type system in sales tax. And that has the advantage that obviously it applies equally to the business and retail markets, but it's a really expensive way of doing things for governments. And what they found is that when they try and take some of that cost away, reduce the subsidy, it really takes the wind out of the sails of the electric vehicle market. And I think Germany is a case in point here. But more recently, we've seen in Belgium, they've had a change of tack and started using the corporation tax system to incentivize the fleet market.
Right.
And it's been such a success that the European Commission is now encouraging other European countries to take the same kind of approach, which we know from our experience in the UK, it works, but it's not a panacea. You need to kind of try and keep both sides of the market in balance, I think.
Yeah, absolutely. Yeah, definitely makes it's an interesting balance. I was talking recently on one of our studio podcasts about introduction of cheaper models into the market and other things. So clearly, and I'd do the same if I was an OEM. I've got a battery pack; it costs me the same amount of money no matter what I put it in. So I'm going to put it in the most expensive model in my premium brand, and that's kind of fair enough. And that's working its way down the food chain. I think the bit that probably isn't talked about enough, and you've really touched on, is the lots of talk about used car or residual values on used EVs. But people not really linking that to the salary sacrifice impact. So you think people talk about Porsche Taycan, how many people have bought Porsche Taycans, self-employed people putting in cars through their business, falling into a market where there just isn't the used car market for that. The only reason there's a new car market for it is because they're basically discounted by 40% because of the tax benefits. So effectively you don't get. They would, if you discounted the used car by 40% or by the same amount, the payment by 40%, you'd effectively you would probably get the same demand. But it's the salary sacrifice has its benefit by getting the new ones in, but as soon as it stops being a fleet vehicle and becomes a used car, then you kind of lose some of that momentum.
Yeah, and salary sacrifice for used cars is something that should work, but it's difficult to make it work economically.
Yeah, definitely. Yeah, it's a thing we've been engaged with a couple of customers on looking at. I believe the opportunity is there for it. The difficulty is that where do you start the price from? Do you start the price from what the car owes you or what it's worth, and the balancing of that? Where do you set the next residual value? And there's a whole thing about multi-life vehicles through the value chain and all of that stuff, which again I would passionately talk about for hours, but probably don't want to draw you into today. So Dom, I know it's not a thing necessarily your key area within Ayvens, but just interested in your take on AI. A lot of talk about AI in the conference today. To get your take on how you use it either within the business or just personally, and kind of what your expectation is for that over the next sort of 12 months or so.
Yeah, sure. As you say, it's not something I use currently in my work, so I can't really give a business perspective on it. But I think it's clear that machine learning and large language models have got offer huge opportunities. And I think something like a model that can kind of sit within your business data and consolidate and synthesize structured, unstructured data from multiple sources across a whole data archive could be hugely valuable for management. But, as you can imagine, with the perspective of a sort of large financial services firm, bank-owned, regulated, things like protecting data privacy and integrity, making sure that the output is actually reliable, those are not just nice to haves. As far as I'm concerned, they're essential before it can be rolled out widely. And that's before you even get to the question of what it costs and whether that's justified by the productivity gains. So my personal view is that, it's clearly a technology with huge potential, but it feels like we're still some way off from fully realising that.
Yeah, absolutely. Yeah, it does seem to be the way. There's some pockets of stuff being worked on. We're working on some areas, and we've got some good friends and colleagues in other areas who are doing some interesting things. But it's still tackling quite specific use cases, either in the managing some of the consumer interaction or some of the back office operational tasks. But you're right in terms of again, I was using this in a previous discussion today. But a friend of mine was saying that he thinks that. We're all going to be out of a job in the next 12 months. And I was saying, well, whilst AI probably could do that, we aren't going to implement this into huge financial institutions, into banks, into car companies, into dealerships in the next year. Just suddenly get rid of everyone. It will be a gradual growth thing.
But saying that, what's been really encouraging today is hearing from people in the industry who are firstly addressing those problems. It's not something that's trying to be swept under the carpet. And it sounds like the progress is really just amazingly fast as well. So fingers crossed we'll get there.
Yeah, definitely. Yeah, the tools are super easy to use. I say we've been developing a few things in our business, and it's that kind of speed to market of some of these things is frightening. So I feel like the drawback or the holdback will be the speed of adoption rather than the speed of development. That's for sure. And then Dom, finally, just thinking, we can also just touch on a few areas, but if you were kind of looking ahead for the next 12 months, what's the sort of area to look at? And I guess in your world as a fleet operator or someone in that space, what's the key kind of area that you're noticing or you're seeing?
There's loads going on at the moment, but something I'm going to be paying a lot of attention to over the next 12 months or so is what happens with the plug-in hybrid market here in the UK. So this is an area where there's really two regulatory changes coming, quite big changes that pull in opposite directions. And it'll be interesting to see which one wins out and where the market lands. So you'll probably be familiar with the zero emission vehicle mandate. The idea that OEMs have to sell a certain percentage of fully electric vehicles each year or face big fines. I think it's fair to say that hasn't been hugely popular with a lot of OEMs.
Yep.
And so the government recently announced some new flexibilities in the scheme to make it easier for manufacturers to hit those targets. One of the big ones was an increased ability to get extra credits by selling vehicles which are below their non-battery electric CO2 emissions average, which is a long-winded way of saying effectively selling more plug-in hybrids. This new flexibility really creates a strong incentive for OEMs to sell more plug-in hybrids so they can get more credits to use in the zero emission vehicle mandate. But at the same time, we also know that there's a change coming down the line expected by January next year that will reassess the way the CO2 emissions of plug-in hybrids are rated. So essentially, there's a view that when you take the sort of weighted average of the emissions when they're running on battery power versus their emissions when they're running on petrol power, the weighting has been a bit too favourable to the battery, with the result that the CO2 emissions are unrealistically low. So there's a new system that's already been introduced in the EU, but we're waiting to have it implemented in the GB type approval system, which is going to mean that plug-in hybrids which are already on the market today would have much higher ratings if they're delivered from next year. And so on the one hand, OEMs are going to want to sell more plug-in hybrids, but on the other hand, they're going to find it much more difficult to do that to business buyers where plug-in hybrids have benefited from CO2 incentives, company car tax incentives. And if the CO2 emissions are re-rated much higher, then those incentives will disappear. So whether OEMs can stimulate some retail demand and use that to get these extra credits in the ZEV mandate, we'll wait and see. But certainly kind of muddied the waters about how zero emission vehicle sales are going to progress over the next few years.
Yeah, plug-in hybrid market's a really interesting one. Again, without getting opening up a whole can of worms about whether they're good or bad, because there's a good argument for both sides to it. It's definitely an interesting one, considering that they could be included in some of the ZEV mandate calculations. We know that some of the OEMs were holding back deliveries of ICE vehicles essentially towards the end of the year, or stopping selling them, or those things. And I guess from an environmental point of view, if you were looking at it purely from that side, you could say, well, you've got if the OEM stopped selling ICE vehicles and just sold plug-in hybrids instead, that would be better for the environment. But I guess it's one of those things that, like often with legislation, it will have a positive impact on one side and then probably a negative on the other. So a year later, we'll end up having to do something to address the output from that.
And undoubtedly, there's a use case where they are good for the environment, certainly better than petrol and diesel. Whether that's been the use case that's predominated in the past, I don't know.
Yeah, a lot of people having them in where they want to pay low company car tax and then just not charging, not using the batteries. I still remember that from the Mitsubishi was like kind of one of the first plug-in hybrids in the market. I just remember talking to people just being like, yeah, no, why have you got one of those? Oh, yeah, well, I never charged the battery since day one. I mean, it's different now. That was a long time ago, but it's definitely an interesting space. But that's definitely a new one to watch for us. So yeah, definitely really good insight and something for us to keep an eye on. Dom, thanks for your time. Really appreciate it. And there's loads of stuff going on in the conference, so I'm sure you're going to want to get back to some of those. But appreciate you taking the time out. And thanks for joining us.
Thanks, Chris.
Right, so we're joined now by Tom McLennan from the BVRLA. Tom, thanks for joining us. Really excited to have you on. We were just talking off air about the newish role that you're in. But just for those who don't know, I think everyone's familiar with BVRLA, but for those who don't, just tell us a little bit about your kind of background, your role, and the organisation as well.
Sure. Very happy to be on. So I'm Director of Policy and Public Affairs, so look after our external engagement with stakeholders, trying to get the industry's message across and land as many points as we can, which in a slightly congested time that we're in right now, I think is more important than ever that we can land those industry messages. BVRLA is what it says on the tin, British Vehicle Rental and Leasing Association. We have around 1,000 members with just over 4 million vehicles on the roads in the UK, and by the vast majority of electric vehicles sold in the UK. Our members offer everything from mobility by the minute to mobility for a very, very long time across four-wheeled modes of transport, cars, vans, and trucks. Well, more than four wheels in the case of trucks, but we're not really into motorbikes.
Yeah, super. Really, really interesting organisation, and one we're super familiar with, and really like the work that you guys do. I've been involved in a few of the events that you guys have done in the past, and things have always been really valuable. Some of the areas that we're going to cover today, we're going to start off actually with EVs. Again, probably an area that's probably across your desk relatively regularly in your role. But just tell us kind of what roughly where you're seeing the market today. What kind of either interesting trends are you seeing, or what's the state of play really for EVs from your perspective or the perspective of your members?
So it's a very challenging position. And I think generally the market is challenging at the moment. But in EVs especially, the sort of number one concern for us is the used market. So we have seen over the last, so basically since October 22, there's been this price challenge with the used BEV market, where we've seen cycles of depreciation, really steep depreciation. We saw another one of those cycles at the start of this year. That pressure doesn't ease up. And where you've got a situation of sort of rapid technology change, so great new models coming onto the market in volumes you've never seen before, more and more brands entering the UK, a lot of competition on that price at the front end. That's all flowing through into the used market. And that really creates a bit of a pressure cooker for those who then are going to be funding the next wave of vehicles and trying to figure out, is that something which is going to happen again? Won't it? We did a massive piece of research last year with Oxford Economics, our most comprehensive bit of research ever, which suggested that sort of depreciation trend will continue all the way out until 2030, which is a pretty challenging landscape to at the same time have at the front end pressure to increase the share of sales. So trying to navigate that is really difficult. What we do know is that things like salary sacrifice are absolutely central to the successes that are happening right now. So we still see, and BEVs are a fantastic product. A lot of them really work for people's lives. And what we do see is when the price is right, when the offer is right, when the solution is right for someone's life, it absolutely makes sense. And one of the areas where that's happening most rapidly is SalSac. And excitingly, we're starting to see that seep through into secondhand salary sacrifice. You're seeing that market as a whole sort of grow out. But we need policy stability for that. We have benefit in kind rates out until basically 2030. But beyond that becomes a bit of a question. And more than that, sort of from a SalSac perspective, even those rates as they climb can become a bit more challenging. Yeah. So all of it, I think the big transition is one which is challenging. We saw some changes to the ZEV mandate, which was the main driver of pressure earlier this year. How that flows through into the market, I'm not yet entirely sure. Do OEMs change their strategies? I think that would be a fascinating conversation for a podcast of yours with an OEM to understand how that shifts things. Do FEVs have a bigger role in the UK? I think that's all going to be playing out in the sort of next 6 months of this year.
Yeah, definitely. So somewhat of a perfect storm from a market point of view. Huge technology change, as you say, market entrance. Also a kind of slightly confused macroeconomic time as well globally, and kind of all of those things coming together. I also agree with a point that you made, which is sometimes forgotten, is that they're actually just generally a pretty good product.
Yeah,
so
100%,
from a market point of view, if you take the kind of wrapper, we're not forcing a bad product into a market that people don't want. It's just about it's the right fit and right time, and you'll never get the perfect flow through because our industry is so complex. The new car flow through, used car, we still don't really know what's going to happen with BEVs at the end of life, because it's been a topic a number of times on podcasts that we've done of them lasting much longer, reuse, rework, battery recycling, all of that stuff. We don't know any of that yet. We can predict it. We've not seen it in any volume. So at the minute, it's a tricky time at the top of the waterfall, but we still don't know where it's running into the sea kind of thing. So
you got that dual pressure, right? You got to, folks are trying to increase that waterfall's flow, but then 6-7 stages down the river and all the tributaries, you're trying to figure out, well, does this cause damage to crops, or does this work, or how do we plan this, how do we dam it? And I think the challenge there is you've got really different use cases having very different experiences. If you are a personal user, you can access a vehicle through a scheme like SalSac, you charge at home, it's a really, really strong proposition, and you can get a fantastic vehicle. If you're a rental company and you are managing an airport and you're trying to deal with the number of returns which will happen there, that's an incredibly challenging thing to unpack. And so, we need to look across all those use cases and try and make sure that we can find a solution or find a route to progress that works for everyone. We don't just kind of have very bitty transition, which is kind of where we've been today, where it's really worked here, it's expanded fast, hasn't worked there. But when you get to sort of super mainstream, we need to make sure that it's working for everyone. Yeah,
and just thinking of how that kind of flow has worked, as you say, it's interesting mentioning things like the rental space. We have some rental customers of ours, not so much in the UK, but big operators in the Middle East and places like that. And these guys are big buyers of cars, and they have always been a big supplier of a used car market. But EVs, like you say, are challenging for them, and I don't know that they will become unchallenging, because if you having a car back and you're used to driving it to be cleaned and for it to be back on stand 2 hours later or something, that's not easy if you're doing 500 a day at Dubai Airport, which we see is a tricky logistical thing. So how does that flow into it? But equally, retail versus fleet. Fleet and retail is mixed. Keep telling everyone fleet is the new retail, but equally, that in itself has its challenges. And
the rental question is a fascinating one, and we've seen in the EU in their auto statement, which came out in March, they specifically mentioned rental at airports as an area which they wanted to investigate, because I don't think there are any examples yet of how you solve for that problem. Maybe we're heading towards that with new technologies. Maybe there are ideas out there, but it's an incredibly challenging one-time pick, and one which we're going to be spending a lot more time this year focused on. We have soft launched a campaign called Bonvoy Charge, which is about destination charging at airports, and how do we make sure that an EV journey is a great journey, and it can be a great journey for a renter. And we see many of our members doing fantastic work to make that situation work, but it's not necessarily that they can just use their existing flows or make it all work. It's an effort. It's talking to customers. You often hear about people. I was speaking to a friend who has an EV in the UK, but when he was going abroad, he said, I wouldn't rent an EV because, I'm nervous about the charging. I said, well, we need to get you, if you're not willing to rent an EV, then we got to think about this more holistically. So Bonvoy Charge is really talking to the case that you can make it work. Our members are doing a lot to make it work, but there's also additional policy steps we'll probably need to see to really unlock it.
Yeah, definitely. And I think definitely that use case is interesting. And actually the one you described of your friends, one I experienced, that we supply the technology for Hertz in the UAE for their franchisee. And obviously we always rent from them when I go to visit, and they offered me an EV. They've got the BYD franchise in their group. But I got there and they went, oh yeah, okay, right. Well, the one we've got for you has only got 50% charge. And I was like, right, well, I'm about to drive from Dubai to Abu Dhabi and I know I need more than 50% charge. And there isn't destination charging when I get there. So I then had to take a ICE vehicle. It's like,
we
just
need that
hold through the whole
ecosystem.
thing. It's like there wasn't any really pre-planning. They were very like, oh, we don't know how this works in our operation. It doesn't really make sense. We've had these EVs thrown into our fleet, and I appreciate it's a different market, but it's still, that experience is difficult for a consumer to.
Well, I'm sure if you had landed in the UK, you would have had a great handover, explained how the chargings are and where all the points are. But
strangely, I would have felt more comfortable in the UK because I'm used to the public charging setup and all of that kind of stuff. I'd have felt more confident going, oh yeah, no worries. Well, I'll just stop for a drink and a bag of crisps on the way back and stick 20% charging. But in another country that you don't know, you don't have the knowledge or the trust of the infrastructure, which is a lot more difficult, isn't it?
So we need to make sure that's, we hear stories about folks, charging networks which won't take foreign cards. That's a problem. Or where you have situations where people, think they can use certain services, or they get charged standing cards, or they leave standing charges, or they leave a car connected when it's fully charged and then get a massive bill on their credit card because they've overstay their time. Those are all risks which, if you're more familiar with the ecosystem, you might know. So it's about how do we get the message out there that it is actually feasible at the same time as recognizing the policy challenges which might exist.
Yeah, definitely. No, it's definitely a space to watch. I hadn't actually thought that a lot of those things we mentioned haven't even considered before. So definitely, the language and structure of visited people coming here is definitely an interesting one. Just to kind of moving the conversation on a little bit, and I'm just interested in your thoughts around AI. Lots of talk about AI in the conference today. I guess both from the perspective of the BVRLA as an organization, but also your members. What are your thoughts on kind of state of play in AI? Is it something you guys are using today? Do you have plans to implement it?
So the BVRLA, we just did a sort of whole staff training exercise on AI in the last few weeks. I think it was the week before last. And we're now offering a course out to the sector focused on AI. I think there's enormous opportunities there, but there are also risks. You need to do it right. And I also think we're still in a phase now where folks haven't really defined, AI is very broad. They haven't defined exactly what they want to use it for and the efficiencies they want to gain and how they want to deploy that. So we, in a very exploratory period, how can we create efficiencies? What are those efficiencies and how do we deliver on them? And I think we mustn't get too stuck into the creative. We need to work out frameworks where you can safely engage and develop practical understandings of the capabilities that you want to deploy. And to be honest, that's a little bit about taking the leap. So I think we're in the same journey as many organizations, but as a trade body, you also have to be sort of looking externally to the sector and trying to see what members are doing. And some of them are doing fantastically exciting things. But others might need support. So that's why we've come up with this idea to have a bit of a training course and to use our own journey as part of the sort of journey we can help members with.
Yeah, definitely. It feels like a really important role for you guys in guiding some of your members, because I think one of the great things about your organization is that you have members from, a rental company with a couple of people in through to, large leasing businesses, and the expertise, knowledge is different in those. I'm not necessarily saying the smaller one is worse than the bigger one, but people move at different paces and will have different understandings of it. And I think making sure that it's sort of leveraged so the customer can get the best output from it, but making sure it's leveraged right is going to be a really important role. Because I think I agree, it's huge opportunities, but not without its challenges, 100%. For sure. And just finally, just to kind of wrapping up, if you were looking ahead over the next 12 months, what was kind of some of the key areas, one of the key areas that you think
it's many not interesting a key area, right?
Exactly,
we got the Supreme Court coming out. What's that going to mean for the environment and sort of motor finance and the adjacent? We've got the starting of reform of the Consumer Credit Act, which is a fundamental piece of work the government's doing. Just next week we have the spending review, which sets out the government's spending commitments for the next 3 years. We're going to have the industrial strategies, which follow that. We're looking at 8 key sectors, which finance is one of them. We're going to have the infrastructure strategy, the next 10 years of infrastructure. The government has been promising many strategies, positions, answers by the summer. So what could change between now and the summer is we might actually have a little bit more certainty. We might know the field we're playing in a little bit better. Whatever the outcomes are, whether or not we agree with them is separate, but we might at least know, well, this is the vision for the next period, and we can at last get our teeth into that and really try and figure out how do we make that work for the sector. Because one of the things that we keep seeing is more and more change, more and more flux. What we need, and I think given the sort of general macroeconomic situation, if we're gonna see growth, we need stability from a policy and directional perspective. So if we can bed that in, then we can start to build. Whether or not, as I say, whether or not those outcomes are ideal, that's yet to be seen.
Yeah, absolutely. That is part of the thing. I've always said that the industry is very resilient, doesn't mind a challenge, but in a point where you don't know what those challenges are, it's very hard to move things forward, isn't it? So yeah, some clarity. Maybe if we're sitting down again in September, maybe if we have a better idea of what those challenges are. But I think it'll probably be a good place for the industry. Tom, I appreciate your time's in demand today, a busy day. So really appreciate you taking the time to talk to us. So thank you very much.
Only a pleasure to be here.
And that wraps up our day here at Asset Finance Connect Summer Conference. So thank you all for listening. If you enjoyed this, please check out our regular studio episodes through our podcast channels, Spotify, Amazon, Apple podcast, also our YouTube channel. Subscribe to keep updated. Lots of really cool episodes coming as well over the coming weeks and months. And we'll catch you next time. Thanks very much.